Chief Investment Officer of Atlantic Trust, and Matt Roddy, Vice President and Portfolio Manager of Rockland Trust. Gentlemen, welcome to both of you. Let's start with Brexit, Dave. How big a deal is this likely to be for U.S. investors over the short and medium term? And when I say medium, I'm thinking between now and year end.
Well, I think certainly in the next 10 days and perhaps shortly thereafter, if the vote goes toward leave, it's going to be a source of global market volatility, but probably not a decisive factor in whether we end up having a decent year in the U.S. equity market.
Would you do anything different? Would you do any, I mean, I'm not sure where your assumption is, but as you say, the polls are now indicating that the leave faction or the leave camp has an edge here. Would you be doing anything different?
In terms of U.S. equity positioning, no. Our view is that the key determinant of whether we're going to have a good year or not is going to be corporate earnings in the second half of the year. We're in an earnings recession now, and the expectation is we'll come out of it in the second half of the year. Whether or not that happens is going to be a much bigger driver for equity prices here than Brexit.
Matt, so I don't mean to put words in Dave's mouth, but it sounds like he's saying the Brexit vote could create some short-term noise, but really isn't going to add up to very much, whichever way it goes, over the long term. Do you buy that?
I do. I actually believe if there is some noise, and there probably will be in the pound and some fear in the markets, it would be probably a pretty good opportunity longer term. You know, it's not an unimportant economy. It's one of the 10 largest in the world. But I do believe that they'll be able to, you know, renegotiate some of the treaties that people are worried about. They'll be able to customize their immigration policy, which will be helpful to them. And we'll get through this. The world economy is not going to shut down because Britain, you know, or the UK left the EU. I mean, many years ago, the call was the British are coming. I guess now the call is the British are leaving. Here in Boston, we used to say that. And the reality is I don't think it's going to be a major issue long term. I think as they do renegotiate some of these treaties and so forth, they might actually create a path for other countries who are feeling constrained by the EU to think about it after about a 2-year window when they figure out how they're going to actually do this.
But I think that is the worry, isn't it, Matt? And Dave, you weigh in here, that if Britain executes a successful, quote-unquote, exit from the European Union, that other countries might follow suit, and that might be destabilizing.
Yeah, I think it raises the odds if the leave side wins, that other countries start scratching their heads and wondering about the future of the European Union. And you could see either peripheral countries like Greece or Portugal consider leaving, or even some of the more economically, financially strong countries like Netherlands, for instance, look at it as well.
So Matt picks Advanced Auto Parts and Disney. Dave, what is your sort of go-to sector or picks right here?
Well, we're focused really on more non-cyclical recurring revenue stream sectors, so things like information technology services and healthcare services would fit the bill.
All right, gentlemen, thank you very much. Dave, Matt, we appreciate you being with us today.
Thank you.
Dave